Mhm. Hello guys, my name is Alex and today we're going to talk about money management, maybe like first steps and things you need to understand about money management. We
Hello, guys.
won't go like deeply inside this subject. We've talked about this previously on the previous stream that was like um, 1 week ago, and we will continue next week with this subject. So this will have continuation after this. So today we're going to talk about sums, and today we're going to talk about money management systems that can be used in trading. And I'm going to show you the basics of the basics. I'm going to show you pluses and minuses of these systems, and I prepared a small presentation. So we will go through this presentation. I think this will take 10 or maybe 15 minutes, and after this, I will come back to the chat and I will answer to your questions. So, the presentation, yeah, money management. So basically, when we talk about trading itself, it's like a giant triangle. Yeah. So imagine like this triangle. So money management is over here, like psychology of the trading is over here, and trading strategy is over here, and they all need to have some kind of combination that will give you like sustainable good results on the long term, long distance. So today we're going to talk about like small piece, but very interesting and uh, very needed piece of the trading itself. So this is about money management. So we will manage our money, yeah, our funds that we have. Um, Before we start, so there is a risk disclaimer. So trading operation in common are matter with a high risk degree and can cause a partly or complete loss of funds. And that's why I'm always on this stage. I'm explaining this like triangle and saying that trading strategy only or money management only or psychology only by itself, they won't give you like a good result. But only them combined together can do this. So, what is money management? Yeah, uh, it's like management system which is like controlling your capital, your funds, and helping you to lower risk at some point. Yeah, actually, money management and risk management are very close definitions because they're operating like with almost the same subject. Money management and risk management too, they are very subjective. So it's like a psychological moment in your trading, meaning so different person they have like different opinion and they have, for instance, different opinion about risks. So some traders they wish to risk more, yeah, in order to gain more profit because it's like very like old equation. So risk and profit, yeah. So they, if we want to risk more, we will profit more. If we want to lower our risks, yeah. So this is risk. Our profit, it will be less. So it's like you cannot undo this. It's like the basics of the basics of risk management. And there is a subjective perspective over here. So different traders want to risk and profit differently. Some are more accurate and they want to risk less and profit, so they agree to have less profit. Some of them are very like aggressive. They want to risk more because they want more profit. So you need to choose and decide by yourself. Anyways, there is so not going deeply into the details. There is one like common recommendation that we we suggest not to risk more than 2 or maybe 5% or maybe 6% of your deposit at once. Because when you're doing trading, yeah, for instance, like your deposit, 100%, $100, yeah, to be more specific. And if you're like risking, I don't know, $50, having 100, it's like too much risk. You can profit a lot. You can like almost gain, I don't know, half of the deposit from one trade, but it's too dangerous in my humble opinion. And it's reasonable to trade and use like small pieces of your deposit. So that's why this 2 or 6 5% are coming from, to cut your deposit into like small pieces and to use them. Okay, going further. So there's like different money management systems. So for instance, um, you can like use some random numbers or like floating numbers, sums within 2 or 5% on different trades. For instance, so without like any reason. So on one trade it will be like 1% of your deposit, on another it will be 2%, on another it will be like 0.5. So no system, it's like not systematic trading. Or maybe it's like $1, or then it's $20, then it's $5. So random floating numbers. Um, I don't think it's quite useful because it's like very very hard to manage this system, but some traders are doing this. Um, when we talk about money management, more often cases are the fixed sum and martingale or like anti-martingale system, something like this, some kind of step systems. We're going to talk about this three guys today at this presentation, not going deeply into the details, but like in common. When we're talking about fixed sum, so for instance, we are using like 1% on each trade, 1% of our deposit, of our, for instance, start deposit, because it will be deviating a little bit with our trading. But for instance, we have like $100, and we will use like $1 on each trade for 1 month, for instance, yeah, for some period of time. Or maybe we'll use these systems. Anyways, maybe it's not reasonable really to use some kind of random sums, because it's like a lot of random stuff in trading. Don't like create new random stuff over here. It's like not reasonable. Okay, so pluses and minuses of fixed sum system. It's like easy to use, like 1% or 2%. So when you're like trading with a fixed sum, your task is to do more pluses than minuses on the trades. And the difference between them, the delta, this will be your profit. Yeah. So the point is to create some kind of trading strategy that will give you more than like 60% of positive trades. Something like this, something about 60. So 6 out of 10 trades should be positive. In this case, you can use this fixed system sum, and you can gain some profit from this delta, from the difference, pluses and minuses. If you will have more minuses, you will like go slightly to the minus in the deposit, something like this. But it's like more accurate when you do trading. So maybe fixed sum is my personal recommendation. If you don't know from which money management system to start from the fixed sum system. Don't go to the like martingale system, as like a lot of traders, like beginners, are going, because it's more hard to manage risk over there. So there are some pluses and minuses of the system too. And this system is like the easiest ever created. You just need to trade a little bit better than flipping a coin. Yeah, flipping a coin is like 50 to 50. It's it can be done. Yeah. So this is about fixed sum. When we talk about martingale and anti-martingale, it's calling parallel system. So they work and operate quite the same, like vice versa, actually. Um, we do have some kind of tables, for instance, like with the steps, like first, second, and third step, for instance, like $1 over here, like $2 over here, $5 over here. So if our trade is negative on the first step, we go into the second. Yeah, um, we increase the sum with some coefficient, like approximately 2.5 times bigger. Yeah. And then if we're like having negative income in the second step, we'll go into the third step. And for instance, we do have a profit over here. Yeah. And this profit, for instance, we make like $4 from this $5 operation. And this should cover the previous losses. That's why I'm calling this loss compensation system. Minus $3, like 2 and a 1 over here. This will gives us like $1 of like clean profit without previous losses. So actually, anyways, it's always about pluses and minuses, about this delta number. So this is a little bit more complicated, but the idea is totally the same. And the parallel system is vice versa. So we do have the same table, okay, with the same actual numbers, 1, 2, like 3 steps. Like $1 over here, $2 over here, $5 over here. Let's make it the same numbers. But the idea is like vice versa. So we have a positive income on the first trade. We reinvest our profit to the second. We're doing again some profit, and we're doing again some profit. In this case, we can like earn a lot from low sums, but it's very hard to achieve long term, like doing this constantly. We need to make like 2 or 3 or 5 or 6 or 7, like the number of steps, positive incomes, yeah, in a row without any interruptions. So it's hard to do, but in some cases you can do this. So this is like martingale and anti-martingale or parallel system. So what is the difference from the trading strategy point of view? When we do trading, on the previous slide I've showed you, so we need to make like more than 60% of positive incomes in order to use like fixed sum system, yeah, with the same sum. So it's like a little bit talking about fixed sum, a little bit better than a coin flipping, right? In this case, you're trading like your trading strategy or your trading skills or something in common, it's like very poor. Yeah, so you do have a lot of minuses. It's like less than 50%. It's reasonable to use martingale system. In this case, it's reasonable to use like parallel system if you're trading like super good. It's maybe more than, I don't know, 70 or maybe 80%. So every 7 or 8 out of 10 trades is like correct, positive, is getting you profit. In this case, it's reasonable to use parallel system. So you can see that all these money systems, they're deviating, and this difference is considering how good are you trading. So it's all about your trading skills, and it's all about um, trading strategy that you are using. Yeah, the positive incomes that you will have from this strategy. So that's why I'm talking about this triangle about psychology and trading strategies, because this all is a combination actually. They don't live like separately. Okay, let's go further. So pluses and minuses of the martingale. Like it's easy to use and it's like opportunity to compensate losses very quickly. And actually, there is another plus over here. Um, yeah, another plus. So if you're trading poorly, yeah, less than 50%, maybe around 30% or only 40% of your trades are positive. So this is one of the best opportunities you will ever have to compensate these losses and gain some result. Yeah. But there is also a minus. There is a huge psychological minus. This strategy, this money management strategy, martingale, it creates an illusion that you can trade without any losses. Actually, it's not true. So even if you will have the table out of, I don't know, 10 steps, for instance, um, there is a possibility that you will need to go to the 11 steps. Yeah, because it's like it's a matter of probability. So there is a probability that you will go to the like 11 steps at some point. It's very, very low, but it's like existing. So you cannot do trading without any losses. If you will see like 100% trading strategy or something like this is all bullshit. So it doesn't exist in a real life. I think you should understand this. I don't know, maybe in your lizard brain because it doesn't exist. Or maybe it does exist. Maybe I'm wrong. I don't know. It's my humble opinion. Okay, so another minuses about martingale system. So if you don't understand these ideas, and if you won't make any limitations, yeah, the limitations are very, very they needed over here. So if you don't do these limitations, for instance, the common mistake when a trader is making this table out of like 100% of his total funds. For instance, okay, let's make the table. I want to explain this stuff. Um, for instance, we do have a table like this. Step number like 4 steps, just for the case. I don't know, $1, $2, $5, and I don't know, $12. Totally, it will be $20. Yeah, in common. So if you have only $20, you will risk like your whole deposit trading by this table. Yeah, your risk will be 100%. Talking back about the risk, um, I've said that risk should be like 2 or maybe 5% of your deposit. Maybe you can like going up or down actually, so it's only the recommendation, but like don't do these tables out of your like 100% of your funds. Yeah, in this case, maybe it's reasonable for this low amounts of money. It's reasonable to use only 2 steps and to risk only $3 out of 20. Maybe something like this, but not all of them. And this goes to other subject, other minus. So you need to have a great deposit, very great deposit over here in order to like have a lower risks. Yeah, if you want to create this table for, I don't know, this table will very so talking about like 10% risk, right? In order to have like this table out of 10% of your deposit, you need to have like 10 times bigger. So in this case, you need to have like $200 deposit in order to trade this 4-step martingale table with a 10% risk. Okay. So the big deposit is needed, and you will like gain here, I don't know, $1 or $2 profit out of this, considering to your um, considering to your deposit, it's like very, very low sums, actually. But in this case, there will be a risk balance. Okay, talking too much, talking too much. So actually, so this is about this. If you won't do this limitation, it can frequently conflict with this basic principle of money management, and you will risk a lot, and this can create some great funds losses. And yeah, maybe there is an optimal opportunity to make five of maybe 4 or 5 step table in order to trade by this money management system. So, okay, let's talk about like next subject, because we will talk more precisely about martingale system next week, but I just want to explain to you this stuff because I think it's very, very uh, it's needed to be explained. So pluses and minuses of parallel system. It can greatly accelerate your deposit, but only in the case of you doing like great job of trading strategy, doing like um, more than like I don't know 70 or 80% positive incomes, pluses out of minuses. And in this case, you need to have like plus, 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 a lot of pluses in a row. So this is like step number 1, step number 2, step number 3, step number, I don't know, 10. And the possibility of you making like 10 positive outcomes in a row or a 9 or 7 or 6, the greater number is here, the less probability will be. So the probability of doing like 100 trades, positive trades in a row is a very, very low number. The probability will go to the zero, nearly close to the zero. And in this case, it's reasonable to use maybe 2 or maybe 3 steps because you can operate with this. If you will create like 4 or 5 step system over here, the possibility of the positive income will be very low. And if you will have a minus on any step, you will lose the previous profit. Yeah, so you will need to go back and start from the beginning. Um, so that's why. And some money management features in for position trading. So the idea of like graduating um, your money, your funds, it's very very interesting, I think, and you can graduate it by doing like these steps, like martingale system or like anti-martingale system. Uh, Actually, you can do this also about like entry points. So for instance, we do have a trend over here. We're going up, and we do have some kind of trading strategy, and it's giving like this buy signals here and here and here. I don't know. It's like the line trend, for instance. Maybe it's reasonable. So if we are not sure that at this point, we are not sure, we don't know whether we are going up or maybe we'll go to the reverse. We can test the market. We can open a trade for, I don't know, $1 over here. I will make some numbers, not a percent, so it's maybe it will be more easy. At this point, we are more sure about this trend going to this direction. So the signal is stronger and it's reasonable to maybe use $2 at this point. At this point, when descent, yeah, it's still going on. Maybe we can add some two bucks over here. But at this point, you understand that come on, this trend is going for, I don't know, a couple of hours. Every trend will reverse at some time. I want to trade it a little bit, but I think it will reach some level and go to the reversal. And you can use like $1 over here too. So it's like 1 and 2, it's like $6 in total divided by this entry point. So it's not one $6 trade. Yeah, it's like four different trades at four different opportunity points, entry points. So this is how you can use money management and position trading. You can divide some big sums for different entry points and create different percentages of the sum. Divide it, yeah, by 4, 3, or 2, or 1. Or for instance, it can be used not in position trading, positional trading, can be used for doing like this. So we do have a trend, and we understand that the trend will go back and reverse at some point. We do have some kind of methods of how we can determine this, and we don't know when. And we can trade. So this is no, this is our trade. So we can trade here, yeah, for $1, for instance, yeah. But it's still going on, yeah. So we miscalculated a little bit. Uh, we can use here $2. So this may be one of the reasons why you can use like martingale system. You can use $2 over here, and it's still going on. And at this point, you're trading with a $5, and it's really going down. And maybe this will give you positive income. Maybe this will also give you positive income. Uh, in this case, you will earn more. Yeah. So, and this create like different entry points, different trades for the it's like different approaches to the same situation, and it's very reasonable to do this when you're doing trading, because you don't know for sure whether the reversal of the trend will be like here or here or here or maybe over here somewhere. We don't know for sure. Nobody knows. Okay, so oh, I was talking for like 25 minutes plus. I think you enjoyed this speech, guys. I assume it will take like 10 minutes. So I'm going back to the chart, and can account can be transferred among traders? Um, no, no, it cannot be transferred at this point actually. So it's your funds, and so no, it's your fund. So this, every subject can create positive and minuses, like pluses and minuses, and maybe it's good to share some funds with a trader, but there also will be some kind of troubles with this. Um, you can you can do this like um, sharing. I mean, you can like create a transaction from options to the forex. Yeah, you can take this money and transfer them within your personal account, but you cannot do this to like another guy because it's not a bank, you know. What you can recommend for someone starting with the $10? So um, I recommend to use fixed sum, this fixed sum. And actually, when you will be using fixed sum, $10 isn't enough too. So what is like $10 deposit? It's like I don't know. When you're going to buy a new car, you need to like go to the test drive and understand whether it's like good or bad for you. So $10 deposit is like when you have a glimpse about the platform. So whether it's like interesting for you to work on it and to trade on it, because if you have only $10 and you're having a $1 trade, so this is a minimum trade amount available now at the platform, you will risk like 10% of your deposit. And this is more than 2 or 5 or 6 that we have in the recommendation. So it's not like critical. So the critical will be to use like $10 on every trade, but still uh, it's not enough in order to have some results. And talking about like real money, before going to the real account, I suggest you to work with a demo account. Yeah, with this demo money over here. Um, Try to do everything over here as if it were like real money, and only after this invest something. Only when you do have some kind of knowledge and you understand what you're doing. Okay, so the recommendations will be like not to use this for the trading, yeah, to have more more balanced risk at the operations. Um, yeah, I think something like this. So $10 is not enough to do some. So uh, it's like another triangle, life triangle. You can do something cheap, like good from the quality and like fast. You cannot do like everything simultaneously, obviously, yeah. Um, if you want to have like good products and fast in like short terms, it will be expensive, not cheap, and something like this. So in this case, if you're having like a cheap deposit over here, you need to trade like super good. You need to be like super professional in order to make something out of $10. And actually, I don't know, it's very hard. It's super hard even for me. I'm doing this for like a bunch of years. Okay, guys, I think this is it for today. I'm a little bit tired actually, talking about this subject. And I wish you will understand this and enjoy this and use this. And we will meet another Tuesday and Thursday at this time. So my next stream will be on Thursday. I wish you good luck and I wish you good trades and remember about all the stuff we were talking today. So goodbye. Have a good luck.